Good evening, everyone. This is Henry Gambell with simpleroptions.com, and in tonight's free video I wanted to do a little bit of a discussion around the topic of pinning. It's something that generates a lot of conversation, and even though it doesn't work quite as well as it may have when things like Netflix and Apple were trading around $500 and $600, it is still a helpful thing to add into your analysis. I've got 3 that I'm going to look at in total tonight, but I think Apple is a good one to start with because you can go through all the detail here and then just look at a couple other examples. So with Apple, one of the main things that I like about this is you had that event announcement that was earlier in the week, and I think that's just the perfect opportunity to take advantage of both sides of directional opinions. Those that think Apple's going to get hammered, of course, coming in and selling puts. Those that think Apple's going to really take off and explode higher, selling calls to them. And one of the best ways to do that is through things like an iron fly, or more aggressively through a short straddle. So the main thing that we were trying to do is sell these calls, sell these 160 puts, and then look for price to oscillate around that range. You can see that symmetry in price provided some helpful support as we got into Wednesday and Thursday, and then Friday's rally took us right back to the 21 EMA right there at 160. So that's kind of the foundation of the concept of pinning and how you can try to work these range-bound moves for some good theta positive type positions. Taking it one step further and looking to the amount of open interest that you had on the calls versus the puts, I was looking at the idea that we would close below 160 because that's where you saw the bulk of your open interest. Yes, the 160 puts also had a fair amount of open interest, which is what helps contribute to the idea of it trading sideways and consolidating at that price. But if you have to pick one, generally I'm going to look to the one that has the most open interest to expire worthless, and that ended up being very helpful with the Apple analysis. So that was the better of the 3. We had another in Microsoft where you have a very similar situation. You have super high open interest at the 75 put, relatively high on the put side. Actually, the call side, of course, is the first one I mentioned, but this is also something that if you were able to work it throughout the day, as it trades through 75, you may be able to get a little bit better fill. The objective is to try to get out as close to 75 as you can, as close towards the end of the day. Sometimes it's a little risky, but that's what you're trying to do with these types of positions. And then we had another we wanted to look at here in Goldman Sachs. Now, Goldman Sachs didn't have quite as much standout open interest. I think it did still have some effect to it, but more so on this is looking at the chart and saying, I think this is a very difficult chart to try and pick a direction. Off the weekly chart, I think you could make some arguments for support, but on the daily, this is very, very sideways. So you've got a quarter point strike sitting there at 225. We were able to sell that iron fly this morning, make about 50 cents per contract on it into the end of the day, and it's not bad for a one-day position. So I think that these are very much worth keeping an eye on. For the next monthly expiration, these will be good symbols to come back to and think of in the same way, and then especially when we get into the end of the year and have the last witching expiration of 2017. So hopefully that gives you some good food for thought. Let me know if you have any other questions, and we'll see you at the next free video.